But let's put the focus then on earnings that have been coming in thick and fast, starting with the first set of numbers that we've seen coming in from Sterlite Tech. They posted a strong set of numbers in the third quarter and, of course, beat street estimates on all key parameters. On a year-on-year basis, the company saw a 60% jump coming in both profits as well as revenues. But we did see some pressure coming in on the margin front. We have with us Anupam Jindal, Group CFO at Sterlite Tech, joining in to help us break down those numbers. Anupam, welcome to the show. Thanks so much for joining in. Third quarter has been a strong one for you, it looks like. Take us through what the key drivers were, and do you expect this kind of momentum to continue?
Thank you. I think this quarter has been the best in terms of revenue and profit, as you also mentioned, delivering a 60% growth YOY in revenue and 62% growth in profit after tax YOY. And this has been largely possible with the continuous almost 100% utilization which we have in our products business, and then the new business which we had started a few years back, the services, the integration business and network build business, that has also contributed significantly. So in fact, this quarter we saw a significant growth or the contribution coming in, unlike until last quarter where we used to have 75% growth, 75% of the revenue coming in from products. This year, the growth which we saw, 60%, actually got significant contribution from services business, which was more than 30% in the current quarter. So these are the two last things. And then another contributor to the revenue was the recent acquisition which we did in Europe, in Italy, Metallurgica Bresciana. We had a full quarter number in the current quarter, which was roughly about 110 odd crore. So if you look at on that basis, these are the large drivers. In terms of the order book also, we see that we have the highest order book of more than 10,000 crore. Last quarter when we reported the number, it was 9,500 crore. So that's another set of great number. Other parameters in terms of ROC continues to be more than 25% on successive basis. So these are very good developments we have seen. We have seen large orders coming in from other European markets as well. And in addition to that, we also have started looking at how we are building our capability and our technological advancement. That is helping us to expand our market size, because we are now looking at our network build or as the major opportunity through our offerings in fiber and system and software solutions. And that at a global level is going to, the total addressable market is going to increase to about $75 billion by FY23. So that's the large opportunity which we see at a global level, and Sterlite is gearing up to address those opportunities. In terms of the margin which you talked about, I think the margin is a function of how much contribution we are getting from products business, which is a high margin business, and a relative contribution coming in from services business, which is relatively low margin business but high ROC business model. So I think it's a function. So it's not to be really concerned about. It's very much in line with the business model as well as in line with our growth territory which we have charted out.
All right, so that contraction that we saw then, EBITDA margin coming in closer to around 22%, can we expect this to be the level that you sustain at going? Expect further contraction?
I think the number at the company level, the EBITDA margin at the company level will always be a function of how much we are getting from products and services. But one thing I can assure that both the businesses have their own growth territory very, very clearly defined, and we remain confident of these individual growth model. And at some level, we are also seeing the convergence of these businesses. In addition to that, the individual business model continue to be highly profitable. We don't see major challenge in that. So naturally, the company level number will be a play of how we get these individual businesses contributing to revenue. I can't say long-term guidance, but absolute EBITDA and absolute PAT will continue to grow. We have already given long back, long-range guidance of $100 million of PAT, roughly about 650-700 crore kind of a number, which we had given. We remain very, very confident of delivering that number by FY20. And looking at our past track record and looking at the strong order book which we have, we remain fairly confident of that. At the same time, we are now working to deliver growth beyond FY20. That's where I talked about the $75 billion growth or $75 billion total addressable market which we are building and working towards.
All right, give us a sense of the debt on your books at the moment. I just want to understand, especially considering the fact that your capex plans are underway, how has the debt moved on your books?
Sure. So we have a total debt of about 1,800 crore at 31st December 2018, and this is, I would say, a fairly comfortable level, close to about 1.1, 1.2 debt to equity. In next couple of quarters, we can expect it to come down below 1. At the same time, debt to EBITDA level, if you look at on an annualized basis, I think it will be again 1.3, 1.4 times. So I don't think that we are overly concerned with that. We have a fairly good position there. Large part of the capex which we had announced is also getting closed. We still have some cash flow remaining, which will be done in the rest of the current financial year as well as next financial year. But we'll be fairly comfortable. Most of it has been contributed by our internal accruals. We have also been able to do the acquisition which we did in Italy. That was about 400 odd crore. So looking at that, the net debt which we have 1,800 crore, roughly about that at the company level is quite comfortable.
All right, quite comfortable with the kind of debt that we're looking at, and of course many opportunities ahead. Thanks very much for joining in and breaking down those numbers for us. A strong set of numbers coming in from Sterlite Tech, and of course the order book is at an all-time high at the moment at about 10,231 crore rupees in the quarter gone by, and that's the view coming in from the group CFO Anupam Jindal, really giving us a sense of what lies ahead for the company. Keeping it with earnings then, in the run-up to the election,